we are in the midst of a bear market, but there are still plenty of opportunities. And that's been evident from, like you said, a few historic examples. And any good trader will tell you the best way to learn about or expect, future events is to look to historic events because they do tend to occur again in a cyclical nature. And that's definitely true.
Hello folks, and welcome back to the Crypto Byte. Today we're going to talk about the current state of Bitcoin as well as providing a couple of trade insights that we're looking at. I want to go over a lot of the most successful short trades of this bear market, some of the common characteristics that they've had, and break them down, look at those similarities to assets that we're seeing do quite well right now in the market. But first of all, Monty, how are you doing? And is there anything you'd like to start off with?
I'm doing good, CJ. Thank you for that. And yeah, I'm excited about this episode because we are in the midst of a bear market, but there are still plenty of opportunities. And that's been evident from, like you said, a few historic examples. And any good trader will tell you the best way to learn about or expect, future events is to look to historic events because they do tend to occur again in a cyclical nature. And that's definitely true in crypto and in Bitcoin. And, throughout the last 3 months, we've seen a lot of interesting themes emerge that have resulted in various assets pumping and then coming back down. And that's what we want to talk about today, is how to notice when an asset is beginning to pump and beginning to pull back down, because oftentimes it retraces and comes back down to where it started. And that's an opportunity that you could capitalize on. And there's been plenty of examples that we're going to show you today. CJ, you want to start us off with a few?
Yeah, this has kind of been like my personal edge, or like the trades specifically that I've looked for during the course of this bear market. Not saying that I've hit all of them or anything like that, but I think that the characteristics of them are important to recognize for things going forward. So the first one, probably the most infamous short of the bear market, was waves. I remember you had a ton of exchanges listing this near the peak. There was kind of artificial pumping coming out of Vyers Finance. They also had an algorithmic peg stablecoin like UST. It was called USDN. Once that depegged to around 80 cents, you could really take a big shot at waves because it had gone up like 400 or 500%, was beginning to show initial weakness, and that momentum couldn't be sustained. So once you see like a break in market structure, and we can show some charts a little bit later on with some more specific assets, but once you have kind of a break in market structure on the 1 hour or 4 hour, typically there's an instance where you still have late bulls who want to buy the dip, and then you all have the early shorts who are taking profits and covering their shorts. Usually that results in one last reaction rally to form a lower high, at which point, as long as the trend doesn't run the previous highs throughout the pump, you can basically sell like an infinite amount as long as the highs aren't ran. Personally, I like to do that with like 2-3x leverage, and just manage risk accordingly. So waves was one of those clear examples, and it fell I think 30% in one day following that peak and really never traded higher. A lot of these setups that you guys will see, very rarely do they ever retest the highs. And so from that perspective, I can eliminate the FOMO of going into a long trade, whereas you can wait, watch the pump. As soon as it starts to show weakness in this bearish macro environment, you can go for the kill.
Yeah, and one thing that you'll notice in pretty much all of the examples that we talk about today and all of the assets that we provide as some insights at the end of this episode is a lot of these pumps happen on narratives, right? Like news-related narratives. Waves was a Ukrainian-based stablecoin, and it pumped when the Russian-Ukrainian conflict began. And there's a lot of great other examples of narrative-based pumps that are then faded, retraced all the way back. You can kind of wait for that narrative to just basically like lose interest when people stop, actively tweeting about it. Then all of a sudden you'll see the asset really start to pull back. I think another great example is Phantom, FTM. This one pumped during the layer one kind of theme of the crypto markets when we had a bunch of emerging layer ones being tremendously successful, people putting money into these new layer ones, things like Luna Classic, things like AVAX and Solana, all were becoming very successful, as well as Binance Smart Chain. And Phantom kind of rode that wave as well. We have other examples in Near that essentially pumped on this layer one narrative, made a couple, new highs. But like you said, CJ, once that initial market structure was broken and it failed to reach that high again, these things have, retraced all the way back down to their lows and are trading at what they were essentially, funded for. So, that was kind of another theme-based trade that as soon as that layer one theme ended, you could have started fading any of those assets and you would have been tremendously successful. So that's just another example. But CJ, I'll pass it to you for the next one.
Yeah. Following up on that theme of narratives, Zilliqa, or ticker symbol ZIL, this was one of the most powerful upthrusts in like 1 week in crypto's history, at least as far as I've seen. And that was due to news narrative that they were entering into a new metaverse product called Metapolis, I believe.
Yeah.
Either way, it was late enough in the bear market or in the bull market, but it still had there were still people willing to take risk on that narrative. So they captured on it before it was too late. But as soon as that initial break in market structure occurred, it never even came close to making another run at the highs. So that, anytime you see this pattern, it's like watching a movie that's played out just over and over again. The next one was GMT. I know you traded that one.
Yeah, that was another great example. There was a lot of play to earn type tokens that were becoming popular, and GMT was one. And this token, had a strong community. They were, insistent that this thing was going to be worth a lot, but you could just tell that it was another token that was just driven by, kind of that narrative of play to earn, people looking to, kind of earn money while they were walking, which by itself is, a decent enough goal, but it wasn't a sustainable model, and it's still at a high valuation, still hasn't necessarily corrected, to the degree that I would expect it to. So that's one that I still think you could, plausibly play to the downside. You think there's still room to play GMT to the downside, or what's your view on GMT?
Yeah, I think there's probably better risk-adjusted short trades that we'll get to, right?
Mm-hmm.
I still think it's going down because it's trading at roughly 50 to 60 cents, somewhere in that range. I know the VCs bought it for like 9 cents. So when they're willing to sell below market price because, their seed round price was, they're basically up like 5x still.
Yeah.
So they're still content to sell regardless of the assets down, 70, 80%. So that's definitely something that's interesting. But also, the last thing I'll say about GMT is that it topped about 1 or 2 days after it was listed on Coinbase. So a lot of times you'll see these assets top on a market-driven event that is often underappreciated by the market participants. And another one that reminds me of that is Luna. So Luna Classic recently peaked because it had that burn token implementation by Binance. They burned about $1.8 million in Luna. That's nothing compared to the 2 billion or so market cap, roughly speaking. But because of that narrative, it led people to speculate to the upside. But until that narrative came, or when that narrative came to fruition, there's nothing to sustain the positive momentum, and that was a really good short indication as well.
Yeah. I mean, that one was an interesting one. It was recent, and also you could kind of tell that it was overhyped in the sense that the burn itself was not significant enough to merit this much positive price action. So, as many tokens as they burned, there was more speculation in the market than there was actual, supply and demand readjustment. So that was a very interesting one. I still think there's a lot of room to the downside, and there's also this psychological element of Luna was at one point one of the biggest crypto assets in the space, and people that either missed that wave or participated in it, made some money in it, see it now trading for whatever it's trading at, less than $3, and they think, wow, this is a great value buy. This thing could go to $200 again. But in reality, it's fundamentally broken. And a lot of these things that we've talked about here already are kind of fundamentally weak assets, right? Like they don't necessarily serve a strong purpose in the crypto ecosystem, but there are some fundamentally strong assets that experience these same pump and dump kind of cycles. And I think a great example of that recently is actually ETH and Lido and Optimism. That's not to say that I don't think they'll make future highs, but you can just see how important understanding narratives are in the space, because the merge itself, people speculated into it heavily. ETH, the price went up, but most people were expecting it to be a kind of buy the rumor, sell the news type event. And that's exactly what it was. And you could see that even more so in the assets that exist on Ethereum, like Optimism and like Lido. Both of those, have pulled back significantly from their highs. Yes, I do think those assets will go on to eventually make new highs because I believe that ETH is a fundamentally strong asset. But I just brought that up because you could see that, these pump and dump cycles are largely driven by narratives. And it doesn't matter if you're in a bull or bear cycle. It can happen in either market.
Yeah, I mean, a good example of that is like Doge, because it made its peak in the early half of 2021, whereas other assets like Phantom, like you mentioned, went on to make that double top second high, whereas Doge never did. One thing I wanted to touch on Luna Classic that we talked about just a moment ago, that is still my largest position of the bear market. I've been short from those levels kind of higher up, but I still think that thing goes to like 15, whether it's at 25 right now, and that's 0.00025. I don't even know what that's called. But speaking to event-driven trading and the merge that you mentioned, Ravencoin was another really great example because you had GPU miners that were mining proof of work on Ethereum no longer would be able to mine, so they were going to go to another chain. And some of the chains that caught this narrative were ASIC resistant, which means that the larger companies that mine proof of work, say like Riot and Mara, they mine with ASIC miners, which are very, very powerful machines that a normal GPU miner can't compete with. And so these GPU miners, the speculation was that they were going to go to Ravencoin. You had like a 2 to 3x in a very short amount of time leading up to the merge. The merge occurs, price tops that very same night, and then we fall about 60% in the coming weeks. That was a really great trade because it was just so event driven, and it took place, like I said, during an event where the market participants mainly overlooked it.
Yeah, and I think now we're starting to verge into, from historical trades to actionable trades, because I still think that Ravencoin has a lot of room to the downside because it still hasn't fully retraced that pump. And that's something that, we kind of haven't necessarily touched on fully yet, but, that's kind of what I like to do is use the starting point as my end target. And I think with Ravencoin, you can still do that. If you look back to see where it started pumping, we're not quite back at that point yet. There are still people that believe that because of those miners that have migrated over from ETH, that actually has bolstered the value of the Ravencoin network. I don't believe that to be the case. You can see it in the ski slope down. There's been very little positive price action, very little short covering. I still think there's a lot of room to the downside. That's why I like Ravencoin as one example of a recent narrative that is continuing to be faded, and I think you can still play it to the downside by targeting where it initially pumped. So I really like that play, and like you said, it literally the night of the merge it topped. So talking to event-driven trading, it doesn't get much more buy the rumor, sell the news than that one.
The also thing from a technical perspective, you talked about this a little bit in Ravencoin going all the way down to where the move initially began. For these boom and bust cycles, if we've learned anything from like 90% of the case studies, price will typically regress to the point in which the move began. And for Luna Classic, for instance, that's like 15. That's my downward target for that particular asset, as well as some others that we can get into. So speaking to some of the assets that have been doing really well lately, QNT, or Quant Network, has done about 380% or 400% since its lows recently. There was a news announced, namely around their proposal to implement a new form of non-fungible token. So for instance, in the ETH network, this is known as the ERC 720. And they're basically creating a way to have cross-chain interoperability for NFTs between different chains as opposed to just ETH and Sol, which is great technology. It's awesome. It creates that narrative that leads to the price impact, but ultimately there becomes a disconnect between expectations and reality, in which things become overvalued. So Quant has just shown the first aspect of weakness. There aren't any perpetual futures on this particular order pair, but you can short it via cross margin on KuCoin as well as some other places. That's a trade that I'm really looking to take because the risk reward perspective is now somewhat defined. You have a high, that you can basically put your stop above, where you're wrong above that level. So that's one that I've been following and will continue to do so. But I'm interested to hear your thoughts as well as some of the assets you've been following.
Yeah, QNT I think is a great example of a narrative-driven pump. Like you said, that news drove price up significantly. But like you said, also today we're starting to see it break, and I think that now we'll get that test. Does it have enough speculation to drive it to a new high? It's looking like no, and that would be in line with what we'd expect from the rest of these narrative-driven trades. So I like that one playing it to the downside. Like you said, it's a little bit tougher to get exposure to that one to the downside, but I still think there is a lot of opportunity there. And then moving on to another one that I really like in terms of downside opportunity, CHZ, Chili's. I think this one is classic narrative pump. I'm waiting on this one a little bit, although it is already significantly down off the highs. This one has struck up a sponsorship with FIFA for the upcoming World Cup, which will be hosted this summer in Qatar. This winter, so starting in late November around Thanksgiving. And that's when I expect price to top for CHZ, is when we start to see those ads. It's already, seen massive waves of speculation, but I think that's a narrative in the future that will have the opportunity to fade. So, watch CHZ closely, because I think you can see, as the World Cup gets closer, people will start to speculate into it, and then as that event, dies down, people will start to fade that trade as well. So that's one that I'll be watching closely as a downside opportunity.
And you can, if you watch these assets trade as much as we do, you can see the interim daily price fluctuations, and you get a sense for the illiquidity of the asset. CHZ is one of the most illiquid in my perspective that I've watched on a daily basis, because whenever time it falls, it'll gap multiple percents, as opposed to, whereas Bitcoin might be a kind of more slower, consistent bleed, this thing just really gaps based on the illiquidity. So I like that, and that's one I'll be following as well.
Yeah, and to that point, I think that's something that applies to every asset we've talked about today. The velocity at which they go up tends to be reflected in the velocity at which they go down as well. So keep that in mind when you're trading as well, because if it was a slow grind up, then you're more likely to have a slow grind down. But if it was a sharp move up, then those speculators are likely to get shaken out very quickly, and you'll see a sharp move down. So you can really kind of not only look to a price target, but also a time frame target based on the speed that the pump occurred. So that's like you said, just looking at a lot of these charts, you'll see it. You could apply the date at which a narrative occurred, and then the fade of the pump will start occurring. And I think there's gonna be a lot of opportunities like this in the near future that are kind of these theme narrative-driven trades, which you can fade after that narrative is gone. So.
Another thing when it comes to actually managing these trades, and something that I've observed after being in these Luna trades versus the Ravencoin short trades, is that when you have an asset with high open interest in the perpetual futures market, you're going to get a lot of short covering, violent reaction rallies when that boom and bust cycle is beginning to pop and the bubble is coming down. And those short squeezes are a pretty good opportunity to add to the shorts. So for instance, if we bounce down to a very interesting level, find support, that's something that I look to fade once the weakness of that reaction rally begins to dissipate. But another thing that I've noticed is that when you don't have a lot of open interest in the perpetual futures market, and it's mainly spot driven, those reaction rallies are far less prevalent. This was very evident in Ravencoin because it's mainly just spot holders being forced into capitulation and being forced to give up on that previous narrative that they bought into. So that's been one of the differences I've noticed in terms of actually managing the execution of these trades. But it's even if those short squeezes come, you can ride them out. We can prevail as long as we manage risk properly. Now, final topic, unless there's something else you'd like to mention, but Aptos as well as Sui are two L1s VC-backed that are launching. Aptos has launched, at least with its blockchain, but now it was very poorly received by the community. It's only doing about 4 transactions per second, which is pretty abysmal, and just a lot of the stuff isn't working, is kind of the general sentiment on Twitter. I've got some ideas of how that token will trade, but first I want to hear some of yours and if you have any interest in participating in that one.
Yeah, no, I definitely have some interest in participating to the downside, and I think that we've talked about this in a previous episode of the Crypto Byte, but looking to like where VCs start to fund as a possible target to the downside, I think is something that will very much be the case with things like Aptos and Sui. We have VCs that are trying to recreate what occurred in 2021 with these layer ones pumping, but in reality, the market was just so much different during that point in time. It was more, there was a lot more speculation. People were more willing to put their money into layer one chains, and as a result, they were more likely to succeed. I think the likelihood of these new layer ones that are launching in a bear market failing is much higher. So just looking back to like where the initial funding occurred for these projects, I think is an obvious retracement target, and that's where I'm looking for them to go.
Yeah, I mean, complete lack of transparency regarding the tokenomics on that particular project, which means there's probably a massive amount of supply that was given to VCs in the seed round. Not given, but purchased at a price relative to zero. I mean,
Yeah.
We've seen this like in Step-In. We've seen it in many various projects. Like I said earlier, it's kind of like a movie watching many, many times. But just my personal opinion, if I had to guess, I say this thing trades pretty much like ApeCoin, where you have the initial release. A lot of people, because of the negative sentiment and feedback that we've seen across crypto Twitter, a ton of shorts jump in. They get squeezed if we have some bullish price action where we go up 20 to 30%. But once you have that break in bullish market structure, if you just look at the ApeCoin chart, I think we see a similar bleed like that as VCs begin to unload. Sell pressure comes. Perps are already listed for this particular asset. It's funny, the project actually asked the exchanges not to list perps so that individuals could not short it on day one, so that VCs could just sell spot into it, which is quite interesting and quite laughable. I think the most bullish sign for a new launching token is it's spot only, no margin, and no perps. Because if you can only spot long it, there's going to be just way less interest for it to go short. But that's just my particular opinion.
Yeah. Well, one thing that's clear is that there's no shortage of opportunities, despite the fact that we are in the midst of a bear market. So watch out for these themes. That's something that we're always doing in the crypto room, and we'd love to see you guys there as well. So check out marketrebellion.com/trycrypto. We're talking about these things all the time, actively monitoring these trades and providing trade insights to the community. And please like and subscribe. It really helps out the channel a lot. But we hope you guys enjoyed this episode. We'll catch you next time. Take care.